Hi everyone, I'm Sherry Bechtel, editor for Finder's Investing Channel, and today we're talking all things Squarespace, what it is, where it stands financially, and how you can buy the stock once the company goes public. Let's dive in. So, should you set your calendar for an immediate buy, or should you wait before investing? Here's what we know so far. Squarespace is a New York-based website development platform that's set to go public via direct listing around May 19th. Once public, the stock will trade on the New York Stock Exchange under the ticker symbol SQSP. Squarespace is one of the leading all-in-one website platforms that businesses and independent creators use to build their online presence and manage their social media. The company serves customers in about 180 countries. Although no price range has been set for the offering, Squarespace recently conducted a private funding round in which it sold 4.45 million shares at $68.42. This doesn't exactly give us a solid expectation of where the stock will price, but it offers a baseline. Now let's take a look at the competition. Squarespace's main competitors are Wix.com, GoDaddy, and Shopify. Wix has seen its stock climb 12.65% year to date. Meanwhile, GoDaddy's stock dropped 2.48% year to date, and Shopify's stock slipped 4.57% year to date. Squarespace reported revenue of $179.6 million for the 3 months ended March 31st, 2021, compared to $136.9 million for the same 3 months of 2020. However, the company posted a net loss of $1.1 million for the 3 months ended March 31st of this year. This compares to a net loss of $10.1 million for the same period of 2020. As with any investment, it's important to do your homework. There are plenty of benefits and risks to investing in Squarespace once the stock goes public. Some potential benefits include a preference for do-it-yourself solutions. Do-it-yourself website creation allows companies and individual creators to build their own sites, and the demand for platforms like Squarespace is poised to grow substantially over the next several years. The market is set to grow at a compound annual growth rate of 9% by 2026. There's also been an increase in online commerce. Brands don't just need to engage with their customers, they also need to provide ways for their customers to purchase goods digitally. This includes direct-to-consumer relationships, and platforms like Squarespace give businesses access to customer data for marketing purposes. But Squarespace faces its own set of challenges, and these include growing competition. There are a number of web development platforms out there, and Squarespace faces some stiff competition. This includes the popular Wix.com, GoDaddy, and Shopify, as well as Square, Yola, Zoho, and SimpleSite, among others. Whew, I know that's a lot. While you mull all of these juicy details, let's turn our attention to direct listings themselves and how they differ from initial public offerings or IPOs. First, a direct listing allows a company to go public by selling existing ownership shares. Instead of creating new shares through an IPO, a company, employee, or existing investor can sell their ownership stakes as stock to the general public. Second, direct listings don't require underwriters, so companies have the opportunity to cut costs on investment bank fees, paperwork, and other administrative costs. Plus, investors can sell their shares without waiting for a lockup period to expire. So, you want to get in on Squarespace? The direct listing is scheduled for May 19th, but that date could change. Before you can invest, you'll need to have a brokerage account. You can check out our guide linked in the description box below and compare your options. Once you find a broker that works for you, set up your account and fund it. It could take a few days for your funds to clear, so we recommend funding your account a few days before you plan to invest. Once that's all set, there are 2 ways to buy shares of Squarespace. 1, you can wait until trading commences and buy shares at the market price, or you can buy shares through a limit order. This allows you to buy shares before the stock starts trading, but only at or below the specific price you designate. Squarespace's direct listing is certainly grabbing headlines, but before you invest, you should always do your research. Vet your investment options and keep an eye out for industry-impacting news events. For more information about this direct listing, head on over to our Squarespace page at finder.com. It's linked in the description box below. And if you like this video, don't forget to hit that subscribe button and hit the notification bell so you'll be the first to know when new Finder videos drop.